Hey everybody. So before we get into the actual plays and whatnot, the strategy, I want to talk a little bit about the psychology of the market and how we can approach these type of strategies with confidence. Okay, as you know, as time goes on and Bitcoin comes to a sort of a climactic point here. We could see when we had this crash. It was peak FUD. Uh, Bitcoin's going to zero. It's all over. So on and so forth. Okay. But I want you guys to realize something. I want you to pretend, and this is my opinion. Okay, this isn't fact, but this is my opinion, and I think it really makes sense. I want you guys to pretend that you were one of the top Bitcoin holders. In 2011, you bought Bitcoin for 3 cents or something, and you put $20,000 into it. You were already a fairly wealthy person, and you could afford to do that. Okay. On the way up, as Bitcoin began its ridiculous rise, you began to take some profits, and your life is pretty much set. Okay, you took some profit, and it went back down, and you bought back, 2 times the amount or something, or you bought back 1.4 times the amount, and you kept 60% profit. Um, but at this point, when it hit $3,000 and whatnot, you were already a multi millionaire. Your life is set, your family's set, everything's okay. The rest of the money is just there. Um, so with that idea, these people who have this insane amount of Bitcoin and this insane amount of money have the power to keep this market alive, and they want to keep it alive because they want their Bitcoin to continue to bring them wealth in the future. Um, so basically, what I'm getting at is that when you see those walls on like GDAX or on Bitfinex, and you say, "Oh, there's someone put up a 300 Bitcoin sell wall. There's no way we're getting through this." Well, if I was to pretend that I was one of the top Bitcoin holders and I was starting to get worried, I was like, wow, Bitcoin's going to test 3,000. If this goes below 3,000, I mean, people might start getting really afraid. They might start panic selling. So if I have 70,000 Bitcoin and I have, because some people do, if I have 70,000 Bitcoin and I have $150 million to my name, I'm going to use $40 million to bounce the market. Okay, I'm gonna say, you know what, I got $5 million on Finex. And these people have this strategy all planned out ahead of time. I got 15 million on GDAX. I got 15 million on Bitfinex. I got 15 million on Binance. I got 15 million on Bitstamp. Um, and that person will say, you know what? Uh, I'm not going to let my 70,000 Bitcoin lose all their value and go down to, $900 again, or go down to $150 again. It's time to bounce this market. I'd rather use $40 million than risk losing the possibility of having my 70,000 Bitcoin be worth $20,000 again. So it's time to bounce this market. So I'm going to set my buys up, and I'm going to market buy at the same time on every exchange for 10 or 15 million dollars. And all those like little mini whale groups and whatnot that think they're big cheeses, and they're trying to push the market down, the cartel or whatever you want to call them, their sell walls are going to get absolutely wrecked and demolished with my buy order right now. Okay, so I press buy, I press buy, I press buy, I press buy. Holy crap, look at that candle, look at that buy volume. Uh, holy, look at that buy volume. Everyone else sees that buy volume. Everyone else sees that reversal. Time to FOMO. the market has officially bounced, your long position is officially way in the green and way safe. You set your stop loss to a safe point, and you have now won the trade. Because looking at it from a big cheese, big money standpoint, these people have more to gain from keeping the price high. So why not keep the price high? If you have $150 million and you have 30,000 Bitcoin, you're going to use $20 million to bounce the market. You and your group of, I don't know how it works, but you and your group of other big Bitcoin holders, your friend who has 30,000 Bitcoin and $150 million, and his friend who has 30,000 Bitcoin and $150 million, you guys are all going to market buy at the same time. You're going to bounce the market. And not only that, but you're going to get cheap Bitcoin, and once again, you're going to be able to take profit at a high point. So that's what they did, guys. They sold it, they bought it. 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 Where's it going to be, okay? That is what you need to understand, in my personal opinion, is that these guys are not going to let this collapse. I just don't see it happening. And with that mentality comes our layering strategy, and how I personally believe it's really hard to lose if you follow the strategy correctly and you layer in and give yourself enough room. Use low leverage, 5 times leverage, and you give yourself enough room with your capital to layer in properly. Okay? I don't foresee them letting it go below 3,000. I just don't. And if it does, then hey, I apologize. And, everyone in the crypto community is going to lose a ton of money. So, at the end of the day, what is the lowest low point here before? I guess it's like here-ish at this point, like below 2,000. This looks like the last line of defense here until we get into, real just old, scary, pre-anything Bitcoin territory, pre any type of knowledge of Bitcoin or anything, back when the people who were in it were, these are all the rich people, not even necessarily, this is like $700 and $1,000. So these people are probably wealthy to a degree if they put in any certain amount of money. But long story short, it looks like this right here, if we were to go below this sort of 2,000 mark, but I'm even putting it at 3,000 because that was the China FUD and whatnot. If we were to go below this level, like I said, everyone in crypto will lose a lot of money. And at that point, it's like, what is your Bitcoin really going to be worth? A whole list of things come into play when we start considering, going back into these pre any type of bull run or global recognition levels. I just don't think they allow it to happen. That's what my strategy is based off of. And if you agree with the story I just told you, basically, and I really feel like it's solid, in my terms of market psychology, and I've been fairly, as always, not to toot my own horn, but I've been fairly on point with calling these, extreme moments of FOMO and calling the crashes when they were going to come. It's just something I think. I don't think these guys let it drop, much further than down here. Okay, so let's get into the strategy. First off, before we get into the strategy real quick, I do want to cover one thing. I want to cover why I'm not shorting down here. For those who, people often say, oh, well, a break of the support, it's time to short down here. And understand that, whether it be the big cheese money I was just talking about, or whether it be, these are probably just like little whale groups and whatnot, because if you're talking big money, you're probably talking about when we had that bounce from 7K. That was insane. When did that happen? Was it this? Oh yeah, this candle right here. This was some big money coming through right here. Went in an hour from 7,400 to 8,400, 1,000 point move in 1 hour. So that's the thing I want you guys to realize about shorting these bottoms, is that people who shorted here on the break of the falling wedge, so they say, oh look, falling wedge broke, you know, depending on how you have your trend line drawn, but I think most people would have it breaking here. You can't go too wide, otherwise you'll never get any accurate data. So people shorted here, and then look at this squeeze, and everyone got liquidated, just cascading liquidations all the way up, and that adds fuel to the fire. So basically what I'm getting at is that you need to be careful when shorting lows, because they're going to squeeze you out. Whales are going to squeeze you out. It happens over and over again. It came down here. Everyone said, oh, we broke this support zone, time to short. We broke this support zone, time to short. We broke this support zone, time to short. And look what happens time after time. You get this short squeeze where the whales push the price up, or market maker pushes the price up hard, and all your orders get stopped out. You fill his limit orders, and that's making him a lot more money than having to close at market. Especially when you're dealing with, you know, hundreds of thousands or millions of dollars. To close at a market fee is going to be huge amounts of profit off of rather having other people get stopped out, and they are forced to market close to you and push sells into your limit orders. And that is the way to maximize profit. So that is why I don't like to short the lows, okay? Because of squeezes like this. They keep happening, and they'll continue to happen. And when the real bounce comes, the real face melting bounce comes, and we see 1,500 point bounce or something from down here in literally an hour or in 30 minutes or something, you will not want to be in a short, because if you don't have a stop loss set, you will get BitMEX overloaded until your whole position is liquidated. Okay? So that's my personal reason for not shorting the lows. And now let's get into the strategy of layering, and if we are to expect these lows, how to approach them. So, few things to talk about. A play like this is to be utilized on 5x leverage. If you do 10x leverage, you can. Just make sure you have the capital to, you know, continue layering down, because as you layer down, your average entry price and your liquidation price changes. That's the whole point of layering down. That's why it's very hard to lose in this situation, because unless the price goes to some extreme level, like I talked about, I don't believe will happen, but if the price was to go to some extreme level and you were out of, you know, let's not even say you were out of capital, because at the end of the day, you shouldn't be using more than, you know, let's say if you're, my average position size, right, is typically about 2% of my portfolio or something like that. 2%, 1 to 2% is my average contract size. And to me, you know, it depends what I'm doing, but sometimes I'm using 10,000 contracts. Sometimes I'm using, on occasion, I'll use 50,000 contracts. It's a matter of sort of how confident I am in the situation, and sort of where we are in the general scheme of things. For this move, I will probably use, you know, somewhere around like a 40 or a 50,000 or something of that nature, because I'm going to need room to capitalize on my move. You know, room to have capital in order to, you know, fill all these layers if I need to. So, but first let's pretend that, because it's different for everybody. Some people are going to be using 1,000 contracts. Some people are going to be using 10,000, 50,000. And I know we even have some people in the group who use, you know, 200 to 500,000. I've even heard of. So let's talk about how we're going to be layering. Basically, what we want to be doing is we're going to use either your average contract size or even 2 times your average contract size. remember the risks involved, guys. Remember that going into this, you need to have that mind state that FUD will come. People will say we're going to $200. If you feel like you're going to be in over your head money wise and you're going to be scared out of your position, then only use the amount of contracts that you feel comfortable with. I don't care if it's 5,000 contracts. I don't care if it's 50 contracts. Okay, there's no glory in getting scared out of a winning position, and I've seen it happen before to many people. There is no honor in getting scared out of a winning position. So use an amount of contracts, use a contract size that you can go to sleep and say, okay, I'm okay with this. If this play doesn't work out, it's okay. It's just a losing trade. I've won a lot of trades, and this could be a losing trade. Okay, as I said, I don't expect it. I always set up my trades to win. That's a big part of my strategy, and a lot of thought goes into making sure these strategies are set to win. But I want you guys to remember that emotion and fear can easily take over people when too much money is on the line. Do not use too much money, any amount of money that will make you feel uncomfortable. So we're talking average contract size. This move is not much different than others. If you want to go a little extra, maybe you can, but that's on you. Proceed at your own risk and do not use more money than you are comfortable with. Okay, so now that we got that out of the way, let's pretend I'm using 10,000 contracts. How are we going to layer this? There's two ways. You can do what is called iceberg layering, or you can do just normal layering. So, and there's no stop loss utilized here, guys. There's no stop loss because the liquidation price continues to go lower as we layer. So if these are our layers, as we add, on our first layer, our liquidation price is here. As we add this second layer, our liquidation price goes to here. As we add this third layer, our liquidation price goes to here, etc., etc. That's how we layer these down. Okay, and the liquidation price continues to go down. So two ways to layer this. You can either do how many lines do we have here? 1, 2, 3, 4, 5, 6, 7. Okay, we have 7 layers. So let's just say we were going to layer 1,000, 1,000, 1,000, 2,000, 2,000, 2,000. What are we at now? 1, 2, 3, 4, 5, 6, 7, 8, 9, and we'll throw 2,000 here just for the hell of it. Okay, so this is sort of like an iceberg layering, but we're also sort of keeping it, sort of even. Okay, so that's just a basic layering strategy, and that's a basic layering strategy. Now, here's how you would iceberg layer. So, what is the pros and cons of iceberg layering is this. If you're going to iceberg layer, you have to realize that a good amount of your order might not get filled. So an iceberg layer would look something like this. And this isn't going to equal 10,000 because I'm just doing it in my head real quick, but I just want to put it out there. An iceberg layering situation would look like this, and this would be up to you to just figure this out, add it how you want to do it. But you would do like 500 contracts, then 700, then 1,250, then 2,500, then 3,000, then 5,000, then 10,000, okay? And I know this doesn't come close to equaling 10,000. I'm just showing you what it means basically to iceberg layer. It means that your biggest orders are going to be closer to the bottom, and as you add these orders, your liquidation price will continue to get increasingly lower. Not like the normal layering to where your liquidation just starts moving like this. When you're doing this, your liquidation will start moving like this. You're gaining a lot of ground on liquidation as your orders grow bigger. Okay? So that's iceberg layering, and the pros of iceberg layering is that your bigger orders are towards the bottom, and you're getting filled with these bigger orders, so your liquidation price will be farther away and your profits will be greater. But the cons of iceberg layering is that sometimes a majority of your order won't get hit. What happens if we only get to 5,000 level? If we only get to the 5,000 level, then 1, 2, 3, 4. Four of your layers, four of your biggest layers haven't been hit yet. Okay, so that's what you have to consider when you're talking about iceberg layering. So what will I be doing? I'll be doing a combination of the two. I'll be, if I was to just go off the top of my head, I'm going to do something like 3,000 contracts, 4,000 contracts, 5,000 contracts, 7,000 contracts, 10,000 contracts, 15,000 contracts, 20,000 contracts, okay? And that's just off the top of my head. It's not what I'm actually going to do. This is probably a little more risk than I personally want to use, but it's something along the lines like that is how I will personally layer my orders. And that's okay because I'm still happy with this. You want to be happy with your position size up near the front, so up near the top. So you don't want to say, oh, well, if my first 3 layers are going to get filled and my position size was shit, I'm not going to make any money. You can still put a little weight on these first orders. Depending on the type of capital you have, you can put a little weight on these orders. Just make sure you have enough capital to put more weight on these orders and you're not overextending yourself in terms of being too uncomfortable with your amount of contracts. If it does come down to this doomsday scenario down here where you need to add even more and all the FUD is piling up and everyone's afraid and there's people are saying some Mt. Gox is moving coins and all these different things will come to light when the drop starts to happen. It always does, time and time again. There's always some type of FUD and then it always reverses, guys. It's nothing new. I feel like the big money is not going to let it die regardless of what happens. The only time I ever would think to abandon ship is if I saw some type of big news about the USA or something completely banning Bitcoin, banning cryptocurrency. Then it might be time to abandon ship. And at that point, your BitMEX balance isn't even going to matter because you're not going to be able to transfer your BitMEX balance fast enough to an exchange to even get a decent price off. Okay? So that is the strategy. It's 5 to 10x leverage. It's layering or iceberg layering. It's no stop loss, and it is entering with the idea that the 3,000 level will hold as per the story I told you guys in the beginning. And that's about everything, guys. So in the days to come, we will see what type of blood we will see. In some type of magical scenario, maybe we just find a bounce and we exit the falling wedge. But in terms of what I see, I think this zone here, I think this, and this is not, I don't even like saying stuff like this because the strategy is the strategy, okay? Don't take away from the strategy just because I'm going off some gut things here. As I said yesterday, trading is about, being methodical and systematic with your approach. Otherwise, you will lose money over time. And that's the way I found that, to maintain, and earn steadily over time for me was to always stick to my system, always stick to my strategy, regardless of, what type of emotions I was feeling, okay? Excluding the one simple fact that if USA was to ban crypto or something, I might dump my stack. But let's take a look at this zone here. It looks pretty strong, okay? We have a lot of activity in this zone. If this zone isn't to be the bottom, where's the next zone that looks like it has a lot of activity? Right in here. Okay, so I'm looking for these zones that look like they have a lot of activity in them, and that signals to traders and investors that these will be crucial levels to watch and see if they hold, see if it's a good opportunity to buy, and remember to watch out for the squeezes. So if this level breaks a little bit, if this level breaks by $300, tons of people might enter a short, and then we might get a just huge bounce, a strong bounce of 800 points or something, and stop out all those people who were shorting there. Remember, these big whale groups, the big money, they're looking to make money at all times, you know. So I can't be shorting at these levels. I'm looking at all these levels equally to enter my layers, and I'm seeing a few main zones that look like they're would be pretty good for a bounce, in correlation with how the falling wedge has been working here, and how it's been forming. Okay, so as always, be safe out there. Thank you very much, everybody. I'll be in the chat if you have any questions, and let's get this good long going here. Okay. As far as other plays going on, of course I'll be monitoring for other plays. It's just when we get into this type of zone where we're near the bottom, the risk on small plays grows significantly, because like I said, the big players are looking to make big moves when you're down near lows, and these big moves can happen when you're least expecting them. And if you're not set with stop losses, and you're not set to secure profits quick, you can lose your profits quick, and you can get liquidated quick, and you won't even be able to close your position by that time. So make sure you're being careful down here by these lows. Obviously I'll be actively looking for other opportunities, but this is the main strategy as far as going into the next few days. And you can always certainly play a bounce on the support. You can always play a bounce on the support, and if it doesn't work out for you, then it can just be a part of your layer. Okay, just make sure you're not over doing too many contracts to the point where you won't have enough for your other layers. But you can always play a bounce off these supports and say, hey, this bounced for 400 points. Let me take my profit on 400 points, and we'll see how to go from there. And then if it comes back down, you can either reopen that layer, or remember, upon a retest of support, they are more likely to break. So you can once again start your layer. Maybe this time, the second time it comes around, you start your layer with less contracts, and just have less confidence in that layer. Okay. But that's how I see it as we go down. You could look for the opportunity on these bounces, while also keeping the layers in mind, and just making sure you're all set up for that play as well. Okay, I think that's enough for today. Thank you very much, everybody. I'll be in the chat if you have any questions, and have a great day. Safe trading.